Hello, my name is Fred Amaran, and I am the founder of Pay for Ed, an innovative company solving the student debt crisis. This program is an introduction to our in-college payer that helps the 20 million students that are making ongoing decisions throughout their college process. If you're unfamiliar with us, we have a complete suite of college funding tools that help you make better decisions, that moves you from how to make the best college decision to the in-college payer, and also then in repayment, making better loan repayment decisions. Today's focus is going to be in the in-college payer and who this helps. Well, it helps the entering freshman. This can help both the parents who maybe not planned as well, but also the parent who wants to engage their child better in the financial consequences of this important decision. The in-college payer puts out a plan and shows them what their life will look like at graduation. It helps the transfer students and the people that change majors, helping them understand the financial consequences of that decision. And also the postgraduate students who are accumulating great deals of debt in many cases. It organizes their debt in one place and shows them all the loan repayment options that are available to them at graduation. So how does it help both parents and students in this process? Well, first we import and organize the current student loans that have been incurred. We help them project their costs and future debt until graduation, unique to each person. We calculate all the different loan repayment options based on how the debt is structured, and help the borrower envision the financial outcome after graduation by showing them both what their income will be and what loan repayment options are and what other cost of living they may have. It allows the parents to engage the child in meaningful discussions on what their life will look like at graduation and help them explain what the financial consequences are of the various decisions they will make. Student debt is now at $1.4 trillion, affecting 44 million people. Some of the consequences of that is that millennial home purchases are now delayed over 7 years. This is what your child's financial life may look like if proper decisions aren't made. So the system creates this customized position. You build your cost. It's unique to your situation and your child's decisions. We separate the merit and the need-based financial aid because we're projecting it over multiple years. This is an important part in understanding what you'll pay over the 4 years. We import all your federal loans from the National Student Loan Database using your FSA ID, and you import it into the system and we organize it for you. Your other loans, such as your private loans or maybe a Parent Plus loan, can be added manually so you can see all of your debt in one place. Then we help you understand the number of credits you'll need to graduation. In many cases, this is not properly explained to many students. Our unique approach helps you understand what you'll be paying over the 4 years based on your current award letters and how it may change based on your EFC changes that a family may face. In this case, you can see a second child's going to come on in that third and fourth year until graduation. This helps parents and students make better decisions as they move through the process. The missing piece within the college funding decision process is the how you're going to pay it. This is unique to each family and is what is needed to properly organize your debt and see the financial consequences at graduation. In this case, we can see this family had $20,000 saved and could afford $5,000 per year. This is a student who either transferred or is entering their sophomore year in college. As we heard from Prince Review, avoiding excessive debt is one of the primary concerns of most families now. Colleges only provide you 1 year of information. This is due to some of the restrictions called the Student's Academic Progress, or SAP. Due to the limitations of the academic progress, schools are reluctant to provide the net cost over the 4 years. There's no transparency the total cost over the 4 years for families to make better decisions and students to project their financial outcome at graduation. Our solution provides that unique customized information that you need to understand how you're going to pay and what your life will look like at graduation, both what is incurred and what is projected. In many cases, there's tools out there that help you calculate a loan repayment amount, but most are unable to properly calculate what your monthly payment will do because you are unable to project your debt. As we're seeing many millennials as they move into the workplace, they rank having a student loan benefit much higher than having a health or retirement benefit. This is because the debt is $1.4 trillion and growing. This gives you a view of how we approach this problem. First, we organize the information on what's been incurred and what is projected, and also separating what is the student federal loans and the other loans because of how those loan repayment options will benefit how the debt is structured. Once we have that all organized, we then can calculate all the loan repayment options that are available to the student based on that debt structure. In addition, we show you what the maximum income level will be to qualify for those income-driven repayment methods. and do the certain repayment methods you're selecting qualify for public service loan forgiveness. All this is in one place so you can make an informed decision and what your financial future will look like. Then we assist you with the financial literacy, explaining how your income and your net income will impact your financial future. Once we have that, we allow the student to build a customized budget to show them what their life will be like after graduation. In this case, you can see the student will have a positive cash flow of $171, assuming the rest of the costs are in their budget will be what they incur. This allows the student and parent to engage in meaningful discussion on what life will look like at graduation as they are young adults. I often talk about how's the best way to save money. Graduating on time provides the best opportunity to save money. With the national graduation rate less than 38% after 4 years, this is somewhat disheartening. What's even worse is that only 58% will graduate after 6 years. This is where debt is incurred and accumulated in many cases, making the problem even worse. With the in-college planning tool, though, we also are able to address the 35% that will transfer due to a variety of reasons, but many times it's due to the emotional decisions that we make in that first year coming out of high school. Also, it handles over 50% will change majors during their college career. Currently, there's no systems that give you the visibility to project your financial outcome, both from what your debt will be and all your loan repayments in one place. So how does the student benefit from this? One, we help them envision the financial outcomes. It helps them avoid excessive student debts because they can see the consequences of those decisions. It helps them plan for a better, secure future, organizes their debt and repayments in one place so they can make conscious and informed financial decisions. How's this done? We do this all with an easy-to-use system with help videos on each screen, coaching videos throughout the system, timely webinars so we can ask questions, and access to a private Facebook community where additional questions can be asked throughout the time frame. So as you approach this decision as both a student or a parent, this is maybe one of the most expensive and important decisions you will make together. By being able to avoid excessive student debt, organizing the debt in one place, reducing the confusion and stress among what it's going to cost you and what your loan, it creates transparency to the total net cost and what loan repayment options you'll have at graduation, improving the borrower's financial future and direction they'll have going forward. So please join us in helping you make better college financial decisions as Pay for Ed is solving the student debt crisis. Please click on the icon to subscribe to this channel or to go to our purchase page and get on the track to making better decisions. Thank you for your time and have a great day.